Hi, Reza here. In this video, I'm going to go through 9 reasons why you would use a limited company for your next property investment. If you haven't already, however, go and watch the other video I did on the factors that you need to consider first before deciding on the appropriate structure. If you have then gone through that and have decided that the limited company is the most appropriate structure for you, then now I'm going to go through 9 reasons why a limited company is beneficial. The first one is the fact that there is no mortgage interest relief restriction for companies. If you're into property, you will know that a few years ago, the mortgage interest relief restriction came into play, meaning that from April 2020, 21 tax year, landlords will not be able to deduct mortgage interest from their rental profits, which is going to have a significant impact on your tax bill. The good thing about companies is that there is no restriction in place and unlikely to be a restriction in my view in the future. And therefore any interest paid on mortgages on borrowings to facilitate property investments are fully tax deductible against corporation tax. So that's reason number 1. Reason number 2 is that companies pay tax at a lower rate than individuals. Companies pay tax currently at 19%, which is set to reduce to 17% post-April 2020. That compared with individuals paying tax up to 45% in the top rate bands on their income, which is a massive differential. However, bear in mind that in addition to the company paying corporation tax, you also still have income tax to pay when you want to access those funds from the company. However, by and large, even those two tax rates combined can still be better than paying tax at 40 or 45%. The third reason why you would use a limited company is that you can have multiple shareholders in a company that can share out the profits. So rather than just you being taxed on all the rental profits as an individual, whether you need the money or not, in a company, you can set it up to have multiple shareholders. So for example, your spouse, your adult children, any other people that you might want to bring on board into the property company that you set up. And the benefit of that is that you can each use as much of your allowances as you have available, because you can be flexible in a company in terms of how much you take from the company in any respective tax year. You're never obliged to take profits out of the company. You can keep them in if you don't need them, and you won't pay any tax until you do. So that's another benefit of using a company, is that you can retain profits. That will then allow you to actually reinvest those profits without suffering more tax. So when it's in your personal name, you've got to pay tax at potentially up to 45% on the profit, which means that if you've got less money to then use towards a deposit for the next investment. However, in a company, you're not having to pay income tax if you don't need the money, and therefore all the profits after corporation tax can be reinvested into your next deal. The fourth advantage of a limited company is the limited liability protection that a company affords, meaning that the company in itself is a separate legal entity, and therefore creditors only have access to the company's assets. They cannot go after the people behind the business, unless of course there's a personal guarantee. Now typically if you are starting out, then the bank are likely to request a personal guarantee from you. However, if you're a seasoned landlord, then you can usually negotiate not to have a personal guarantee, and therefore the bank or the funders are limited to the assets of the company. They cannot go after your personal assets where you are a shareholder of the company and you've acted in a proper way as a director. For property development, this is very useful where perhaps it's more of a riskier venture, so the ability to do property development in a company is very useful because of that limited liability protection that a company provides. Number 5, the fifth advantage is the option to sell shares in the future of the company. So why is this beneficial? Well, when you have a company that owns property, you as a shareholder own the shares in that company, and the company then owns the properties. If, let's say, you built up a good portfolio over time and then you came to sell, you have the option, rather than selling the properties, but actually to sell the shares in the company to a potential purchaser. Now, why is that beneficial? Well, it's beneficial to the purchaser, which makes your sale more attractive, because the purchaser only pays 0.5% stamp duty currently on the share. So they can take over the whole company from you and only pay 0.5% stamp duty, as opposed to, as we know, much higher rates of potentially up to 15% depending on the values if they were to buy the individual properties. Advantage number 6, it's much easier to bring on board new owners, new shareholders to a company structure than it is to bring on board partners in a personal or partnership scenario. So new shareholders, for example, to share in the company's future profits and future income, where you're divvying it up perhaps between children who have now become adults. Advantage number 7, succession planning. So following in the same vein, where you want to pass perhaps the value of the portfolio down to the next generation because you're now considering inheritance tax planning, much easier to do in terms of transferring share ownership rather than having to transfer title of a property. Transferring title obviously involves issues with conveyancing, you've got capital gains tax issues to consider, stamp duty to consider. Again, a company makes it easier to transfer shares rather than having to transfer interest in the property by title. Number 8, much easier to leverage the portfolio. So as you are growing a portfolio, you can then use that to your advantage and can go to lenders and funders to say, I've got X amount of properties in my company and I want to gear up to fund the next phase of my growth. And you can then have access to much better lending arrangements and negotiate better terms with your financiers through a company on a leveraged portfolio basis. And lastly, number 9, you have a better ability to monitor the performance of your investments where you've got it in one company. You can these days through cloud accounting technology with Xero or QuickBooks have everything, all your bank information recorded into software and everything's been reconciled, so you can ensure that you're capturing all the expenses and then run reports to see which properties are making you money, which ones are losing you money, what is your return on investment, what is your return on capital. These reports are key when you want to grow because they enabled you to show confidence to an investor or to a financier to back you in your next phase. And bear in mind, from April 2020, HMRC's Making Tax digital program is extending to landlords. So any landlord with over £10,000 of income will need to start rendering quarterly reports to HMRC. And conducting your activities through a company where you have the benefit of an accountant and an advisor looking after you, perhaps taking care of all the management and compliance, will assist you in ensuring that you are fully compliant with HMRC. I hope that video has been useful, and to find out more, you can click on the links below.